PayPal has not had the best 3 years, as the company's stock has fallen approximately 78% since its peak in July 2021. The company has faced large increases in competition from companies such as Zelle, giving PayPal's money transfer service Venmo less market share as Zelle enables users to transfer money directly through their mobile banking apps. PayPal also faces competition in transaction processing as Stripe, Square, and Shopify have encroached on the payment service company's market share, a position PayPal hopes to defend as we will explore later. PayPal's new CEO, Alex Chriss, has been tasked with turning the company around and promoting the development of new business strategies for the company as their existing business models are experiencing the high levels of competition. Although some skepticism has existed since Chris mentioned PayPal would quote-unquote shock the world in a CNBC interview following his appointment as CEO, signs of innovation have become evident in 2024 and of recently following the initial soft release of Fastlane. In early 2024, PayPal had announced different innovations the company had in store. This announcement was made through an Apple-style announcement video, PayPal First Look. Although an improved customer checkout experience and Venmo business profiles were discussed, these innovations were simply improvements on existing services the company has offered. However, Fastlane stood out as a new product for PayPal, offering a streamlined approach to customer checkout experiences, which would benefit businesses as PayPal stated conversion rates with the service were higher as many potential customers become disinterested in purchasing a product if the checkout experience requires multiple user inputs such as credit card information. PayPal states the goal for Fastlane is to allow for the fastest checkout experience possible. The tool would allow customers to simply put in their information such as their email on a checkout page, followed by an SMS two-factor authentication, which would then allow Fastlane to auto-populate the checkout with the customer's payment and shipping information for the order to be completed in one final click. Now, I do agree with Fastlane's potential to speed up the checkout experience. However, I am surprised by the lack of comparison made online to another checkout tool that has done almost the exact same thing for the past few years, that tool being Shopify's Shop app. Shop enables customers to also check out with limited clicks, following the input of their email and a two-factor authentication code. When I was initially researching Fastlane, I was taken back a bit by how much it actually resembled Shop, since I had experience using Shop in the past. Though Fastlane's methods may not be entirely original, the implementation of the service is unique as Shop is only available on websites hosted by Shopify. PayPal, with its broad reach on existing websites, will enable businesses that may not be using Shopify to conduct streamlined checkouts. The benefit for PayPal and Fastlane comes as they have a wider reach into e-commerce. If PayPal continues to develop Fastlane as Shop was developed, Fastlane would serve as an advertising platform in addition to a checkout tool, as Shop already does this by promoting items specifically relevant to a customer's purchase history and allow them to shop in an independent Shop app that also supports order tracking. This is likely to occur as PayPal is actively taking steps to broaden its advertising capabilities, such as hiring Mark Grether, who was previously the Vice President and Director of Uber and Amazon's advertising segments. I did not cover PayPal's advertising potential in depth, but with 426 million active users according to their 2024 Q1 earnings, PayPal has a large potential as to the number of eyes advertising on the platform would reach. Without getting too much into the valuation of the company, by looking at PayPal's price-to-earnings ratio of approximately 16 times and forward price-to-earnings ratio of 14 times, the company is largely undervalued relative to its peers, with companies such as Block that owns Cash App and Square with a price-to-earnings ratio of 51 times, and Shopify, although not directly comparable, with a PE of 77 times. PayPal itself is also taking advantage of its undervaluation by ramping up its share repurchase plans, now increasing its repurchase guidance to $6 billion. The company still maintains a revenue growth rate of approximately 8%, which is lower than its historical growth rate, but still shows the growth rate potential within the company. As PayPal is in a transition state, low customer satisfaction with its new innovations would potentially shift my view to not seeing PayPal as a viable investment for me. But personally, with its current valuation and service potential, I feel PayPal is a buy for me. And I hope to see the continued development and progress made towards Fastlane, its advertising segment, and any other innovations the company has in its pipeline.